Hi traders, welcome to Profiling to Profit, the week ahead in futures. It is July 30th, 2016. Hope everybody had a great week and hope everybody is enjoying the weekend. Last week, more of the same, low volume, not a lot of volatility, one directional to the upside, of course, and we thought that FOMC was going to play into some volatility, and of course that did not happen. So let's take a look at what's coming up this week. All right, over to the economic calendar. We don't have a lot going on in the U.S. right now. However, all eyes are going to be on Friday here, August 5th, unemployment or the employment situation, which is called non-farm payroll. That will have some effect. Now, will it be the market mover that everybody's looking for? We're not real sure at this point. With the elections coming up in November here in the United States for the president, we think that they could be watching this number very closely. So keep an eye on that. Other than that, there's not a lot happening this week in the U.S. Overseas, we do have a few numbers. Let's take a look at those. Let's get down here. The RBA is going to have an interest rate decision over in Australia that is happening on Tuesday. So if you're an Australian dollar trader, you need to be aware of that. As we go forward, let's see here. On Thursday, there is a lot of news out of Great Britain. The Bank of England has a lot of things on tap, including the interest rate decision. So keep an eye out for that. And then, of course, as we go down into Friday, we have a couple of things. Again, the RBA has a monetary policy statement from earlier in the week. That's over in Australia. And then, of course, we have non-farm payrolls here in the United States. So know your times. If you have positions, do what is necessary to either hedge those positions, or if you have to, get out of the way. All right, let's dig into the markets here, guys, coming up this week. Let's start with the NASDAQ. That's where we always start. As you can see here, we are just one time framing on a weekly basis. These smaller profiles are weekly profiles. The candles are 2 hours. This is a longer profile that goes out many, many weeks. You can see here 3 weeks ago, 3 weeks ago, we went ahead and gapped up, and we keep going and going and going. Even with the FOMC, there is nothing happening to the downside. We don't know when they're going to touch interest rates here. It's going to be very it's a difficult decision for them at that level, and it's getting crazy. We don't know what's going to happen at this point. It's really hard to plug your nose and just buy this market this high up, because everybody says, well, the volume's low going up, which means nobody's buying, and the debt load is very bad in the U.S. and stuff like this. However, right now, it's really hard to fade this market. Extremely hard. Your timing has to be very good, and you need to be really good at knowing when to get out of these things. Is it possible? Sure, it's possible. However, the path of least resistance is to the upside. So when is a shorting possibility? Now, of course, we've been looking for this zone down here. The risk zone at 44.98 up into that 45.17, give or take a couple points. However, we do have this channel. A channel can work really well in a situation like this. If this channel's broken, they're going to probably come down and touch this 46.55 area, maybe get a little bounce, see if this channel rejects a retest or something, and then they roll it down into the zone. We're going to wait until we get a break of this channel before we start to look to maybe establish a short. At this point, if they keep going up and up, it's a futile attempt to try to get short, and just not a good thing at this point. So watch this zone right here. If we come down, if we break the zone, we'll most likely go to the 46.55 area. You could nibble here if we do break the zone, but keep it tight, because they've been buying everything. Any dip that's happening, they're buying right now. Who's buying? Yeah, it's hard to tell. Machines, you name it, they're all buying it. It is going up on lighter volume. However, it's being bought and it keeps going in. No sellers are apparent in here. So keep your powder dry in there. Be patient. We'll find something to the downside. If you want to get long in here, you may want to hold off. We want to wait until we get down here and establish a nice position. So, all right, over to the ES. There's not much difference in the ES, except it over the last couple weeks it has coiled more. We we didn't have an inside week. It went outside by a couple ticks, but it's not, it's not the up move that we've been seeing in the Nasdaq and also the Russell. One thing I wanted to point out on the Nasdaq, let's take a look at that again. We are just a couple ticks away from most recent highs here. We pull back 47.39 is the highs that we saw back in November of last year, and here we are. I think we closed down around that 47.36. We're only just a couple points away. Most likely we're going to take that thing out. We may gap it up on Sunday, take that thing out. We'll see what's going to happen here. All right, let's go back to the ES here. All right, same thing with the ES. There's nothing to the downside at this point. If we get a big gap up and they roll it back over and come back into this range, then we have a great chance of coming down and testing the value area low and maybe the low of that week, this previous week at 2152. But as you can see, I drew a line here at 2151 area. Right now, if the bulls want this to go up, then this is what they're going to have to hold on to. If this thing breaks, then we could slide pretty quickly down into our zone, that 2124 area down the 2114 area, which we could look to nibble to the long side. To see if we can take more, get more upside into the latter part of the year. The TF, excuse me, which is the Russell. Let's take a look at that. Real similar to the Nasdaq, just continues to sort of one time frame up. And it looked like it tried to rally. It looked like it was going to sell off this last week, in on Friday and Thursday, and they just kept buying this thing up. So you can't fight that. You just got to either go with it or just be patient for your next setup. And let's talk about that real quick. People say adapting to markets is important. I tend to disagree with that, because that means you don't have a plan, and that doesn't mean you have a natural setup, or you don't understand what a trade looks like to you. You're going to have to adapt to pace. I get that. There's going to be times of the years where the pace of the market is really slow, and so, but if your setups are the same, or your entries are the same, or the methods that you use to get into the markets are the same, there's no adapting. What you have to be is very patient to wait for your stuff to set up, and that's where most people get in trouble. So just remember that patience is the key. If you can't force something that the market isn't giving you, so be patient. When the market provides it, you'll just take it and run with it. So let's move on here. Oil is one I want to take a look at. Oil was probably the trade of the year so far. We had a very nice entry up here. We got the targets at 45 and then 43, and then we said, hey, we got this zone down here that we want to look at to possibly get long. If you were still short in the zone, if you haven't covered, I would cover here. We covered up above, of course, at the 43 area. Now we have the zone here that we were looking at. Now, depending on your trigger method, whether you scaled into this or whether you're waiting for a trigger to let you go, you could be in this, or you could have been stopped out in this with this one big candle here. It just depends on your thing. If you are long this market, obviously the stops are just below this low, and your target then is back to the 43 area, and then I'm going to leave that second target open, because it could go up and fill this gap up here at 44 and a quarter, or go higher at this point. If you are not long and looking for a trigger, this zone is still holding. It needs to hold above the 34 area, 35 area. We are watching that very closely. If it breaks this area, we could see a nice slide. We could see down to 39 pretty quickly. So now also I will say we could chop around in here for a while, because we've seen, let's go back and look at where this market has come from. We had this volume area right here. As you see, it points out at 41. We moved up out of that volume area. Now we've returned to it. We will see that if it chops around here and starts to balance, then we could break up to the upside, and again we could also break to the downside. So just define your risk in here. Right now we're watching that area. We are not long this at this point, and we were watching to make sure it stays above this area. If we get a trigger to the upside, we'll definitely take that trigger. All right, gold. Man, this one was a one that hurt. We were not able to get into gold. It did not come down. Again, we talked about patience. It did not come to our zone here. We were hoping it would be, and man, it was close. But you know what? We're not going to chase markets. We're going to get into them. Now, if you have a method of where market pokes down below the previous week's low and then comes back into that zone, balances and then takes off, and you got long into this market, congratulations. You had a target up here at 1351. You should have some off. Your stop should be pulled, and your next target and your final target should be up here at 1393. Just manage a trade. This is an awesome trade. We knew this was going to probably happen. However, it didn't come down into our zone, so we follow the rules. That's part of it. We're not going to adapt and try to chase. We're going to wait, and unfortunately sometimes that means missing a trade. So in gold, if you're long, congratulations. It's a great looking trade right now. Let's go take a look at the euro. The euro one is a head scratcher in our book. We had these 3 weeks of consolidation and balance. We had one that consolidated. We had 2 weeks prior after that of inside trading, and then with Mario Draghi and the euro making their decision on interest rates, it broke down. We thought, wow, we could get down into our zone here where we could possibly get long or establish a small position, and it did nothing but it just absolutely cranked back into the balance area. It's tested the upper area here. Does this mean we're getting long? No, not a bit. We're still bouncing around in here. Now we're thinking this thing could bounce around for a little while. We're still watching these zones. We want to make sure that price stays in between these. These are our short area. This is our long area. We're going to maintain those. Otherwise, we're not going to do nothing until we see these zones in here. If you are long or short, just manage your trade accordingly. And then let's take a look at corn real quick before we look at the notes and the bonds. All right, we talked about corn. We said, hey, corn could be. Well, if I can get this to move, sorry. There we go. All right, so we said corn could consolidate down here. We definitely wanted to see corn stay below $3.45, which it has. It went up and just barely touched it, or at least sniffed it before it rolled back over. Again, we think corn can just consolidate down here until they start harvesting in some parts of the country in October. Then we'll have a better idea of what the actual supply is going to be into the marketplace. So right now, corn, if you miss this trade in corn, again, there's nothing to do. Don't try to get cute in here. Corn has gone, it's gone a long way. So it started and it broke up back here in April. It saw 439. At one point we were just looking for $4 even, and if you trailed that trade, we did not trail all the way to 439. If you trailed that trade, you got a very nice opportunity, and then they just absolutely rolled this thing over and cranked it down, as you can see. So it's been an up and down seesaw type of trade. This thing probably needs a little rest, and it may do that into the harvest season. So right now, just keep an eye on corn. There's nothing really to do into that market. And then let's go take a look at the notes here. Notes, we had nice trade in notes. We weren't able to get into it again. We had a zone up here which we've taken down. That zone, we said if price moves into that zone, that was our risk was right above that. It barely poked into that. If you got short into this, you had that first target at 132, and we said to trail the stop, pull the stop down, take some profit, and this is why you do that, guys. And this is a great example, and gals as well. This is a great example of why you manage a trade, because we have a target down here, of course, of 130.26, and that's also in line with the POC of the larger profile. Well, that's a magnet. We wanted that to get down there, but we can never know if it's going to actually get there. Crude oil, it did happen. Not only did it hit our 43, but it actually went through the 43 and kept going. In this case, it started to balance down here, which was a good bearish sign. And again, this week, early in the week, it was balancing, and then it took off to the upside. And from that point, that was from the FOMC. Obviously, bonds didn't like they did like what Janet said. Now this doesn't bode well for the actual yield on these things. However, if you're trading the notes and the bonds, this may be a good thing for you. We're back into that zone. We said, hey, the market's got to hold this down, this zone now. We closed right at almost to the top tick last week. That's pretty bullish there. At this point, we're watching this. We're not going to define risk above this. Just for the fact that this is a pretty bullish scenario. They may be shooting to go up and take out that 134 again. We'll have to wait and see. If we see a move, and one of our triggers is where we see a move on a daily time frame. Let's tell you what, let's go ahead and let's do something here and I'll show you. For some of you guys that are looking for how we trigger into some trades, go back a few videos ago. We talked about that. We gave some examples of how to do it. One of my personal favorite ones here is this one, and I'll share it with you real quick. It would be where this is Friday's profile, a nice P profile. We had this big move up. And then it bounced, and of course it ran into the close of the notes, 133.02. So if we were to see price move up and then come back and enter into this an area or the days range, then that would probably tell us that they're rejecting that move, and then they may go down and test. Well, they most likely will test the valuary low. And then if this thing is really weak, they'll go down and test the actual day's low, the prior day's low. In that case, we would define our risk as the high of that current day, and be that as it may, we'll go ahead and manage the trade and make targets on that. So that is a trigger that we would look for in this zone. There's other triggers you can use. We're just not going to scale into this thing. At least I'm not going to scale into this thing. That's not my method. So you got to define your entries, how you enter them. I will encourage you to enter with some type of trigger. Just don't blindly enter it. Have a plan. You can scale into it. You can do all kinds of different things to enter into the trade. So please define that. And if you have not defined that, I would encourage you, of course, to get that defined before you take any further trades. All right, let's go ahead and take a look at quickly the bonds before we wrap this up. Bonds are the same situation. They actually did poke down below that previous week's 2-3 weeks ago, and then rally back up. They closed at the top here. They're most likely shooting for that 175.07 area. We do have a small gap in there. The bonds look like they definitely want to take out that 177.04. We will have to see. Right now, there's just nothing to do in the bonds or the notes for us. We missed the trade for the most part. To the upside, and we weren't even looking for that trade. This was a short that we were looking for to continue going down and testing at 130.25. We didn't get in the trade, so we were looking for areas to get into. Right now we're back into that area. Like I said, guys, wait for a trigger and keep it tight, okay, because they could take this out pretty quickly. Other than that, I hope you guys have a great trading week. That's all we got. Keep your news in front of you. If you guys are needing some help, reach out to us. You can a few different ways you can reach out to us. You can email us. You can contact us over here on the contact page at marketprofiletradingacademy.com, or if you'd like to call us direct on the phone, we will pick the phone up and talk to you. 541-728-3217. If you just want some good free resources, we got loads of material on here. We have videos, we have replays of webinars. Josh does a phenomenal job at that. We have all kinds of great videos. Matt talks about how to trade, talks about a lot about the psychological side of the trading market, because let's face it, that's 90% of it. Execution is a portion of it, of course, but once you're in the trade, it's all psychological and how you manage things. So learn it, take all this free resources, use it. Again, please do not hesitate to reach out to us with any questions or concerns. Otherwise, have a great week, guys, and we'll talk to you next week. Take care.